Hello, this is Chuck and Markets Up Chuck. Perhaps the king of all growth stocks has been Amazon. And just to kind of put everything into perspective of what I mean by that, let's start by looking at their historical performance. Had you invested $10,000 in Amazon just after it went public in May of 1997, that $10,000 would have grown through yesterday's close to $1,935,000, averaging over a 31% rate of return. That significantly dwarfs the record of the S&P 500, where $10,000 would have only grown to $29,000, including dividends, averaging 5.8%. So this is why I refer to Amazon as perhaps the king of all growth stocks. However, when you evaluate Amazon using traditional methods such as the PE ratio, you'll find that it's trading at the astronomical blended PE of over 172. Trailing PE ratio using trailing 12-month figures would be over 180, but forward PE ratio would be a little better at about 60. But you can see there is no relationship between earnings as depicted by this orange line with Amazon stock price as depicted by this black line. This has been an absolute powerhouse in terms of performance. But what's really interesting about Amazon is how much cash flow it generates. So when I switch to operating cash flow and look at Amazon stock price in relation to its operating cash flow, we discover that Amazon has really tracked, or the market has valued Amazon based on its operating cash flow. And that cash flow is expected to continue to grow in the future. So if you're looking for a growth stock to invest in and are willing to overlook the fact that Amazon doesn't make any real level of earnings, the cash flow potential growth of this company could still continue to generate double-digit returns or almost 30% returns going into the future, assuming they continue to grow their cash flows and the market continues to value it on that basis. This is truly a growth stock when looked at from the perspective of operating cash flows, not so much on earnings, but the market's willing to overlook its dearth of earnings and invest in this company based on its ability to generate cash flows. This company's stock price has clearly correlated to operating cash flows and as a result continues to look attractively valued on that basis today. This has been Chuck Carnevale saying thanks for listening.